All right, let's get going here, traders. We'll finish off with a look at some ETFs. First, we'll start out with the GLD balance beam model here going back about 700 days. Yesterday we looked at gold futures. We know how important the low 1320s are. We're just a bit above that in the gold futures. So there's a little bit of a glimmer of hope for the gold bulls here. For the GLD ETF itself, there's a lot of trading commitment about where we are right now. That's where the most dominant spike is, 127.50s. Price is just sort of hanging out there, a little bit conflicted with black candles but green trader trend. But as a bottom play goes, and this is about as good as you're going to see it with a lot of trading commitment here. Bulls need to get this thing up just a little bit, another dollar to clear this final ceiling here, and then we could see it pop up about to the 135s. This is correlating to where we had the last target up here, 1391, if you remember, in gold futures. That's exactly where the high came in for gold itself. That's where this swing high comes in. That's the main first target for the GLD here, is getting up to this swing high here, round number 135s. And then it really opens up in a big way. You could make a nod to the low 140s here, but there's a larger scale absence of trading, a big air pocket there. So as this sits right now, if you have zero position in it, the one thing to look for is a little strength to come into the mix here. See price move up about $1, and then you want to respect this zone here for the first target area, and then things open up quite a bit. The main goal of this trade is to move back to where there was prior support, that was the breakdown level. This was actually one of the best shorts that we've had in years, probably one of the best all-time shorts, was calling this breakdown here. That air pocket that pulled us down, that's something that could pull us up here as well. So the bulls start trading it over 135 for the GLD. They've got a shot at moving it back up to that zone. There's a real obvious spike here, so this becomes number 2 and retesting this zone just south of that area. Consider that the third target zone. As far as risk control goes, this is at a spot where the bulls have had a real hard time keeping these bounces alive, breaking back below. So anything below these spikes here would be pretty darn bearish, and below 123.50s, you're below all of this commitment, and that's obviously bearish. Likely going to go down to hit the analogous 1243 in gold. That's going to be about 118s in the GLD. But that's the current trade setup. Now, one thing you guys can think about doing, I've been mentioning this for a while, being long gold, obviously aggressive, but to play this with out-of-the-money call options, especially on a day when gold is not doing so much, the premiums on upside targets will be much lower, and multiple months down the road, if gold does rally, this does turn out to be a key hold for it. Those are a great way to have a low dollar commitment to a potential huge magnification. So out of the money call options at these strikes, it doesn't have to go up to hit the targets for them to appreciate if gold rallies. And I want to show you guys the XLF. I normally don't look at that many ETFs. I prefer to find stocks that are part of whatever that ETF is about. But here's the XLF financial ETF. And I just want to show this to you because of where we are with the market at large. And as the XLF goes, obviously a key component to the market, there's a big trading commitment here, low 22s here, and we broke above, a little bit of volatility there, and here yet again to new structure highs. So we're at 1273s. 22 round number is a real key spot, and the reason I want you to see this is because if we do get a breakdown in the market here, this will likely break down as well. And there's actually a lot of trading commitment throughout this zone, but the two main areas are basically 20 and 22. Pretty hard not to see that orange spike there and there. But there's a lot of noise in between this area here. There's a lot of trading commitment in between these areas. Normally we see more of a gap like here and here. But watch a break in the XLF below 22s to signal a bigger market unwind. That is one thing I wanted to get across to you guys. And the other is the oil holders, OIH. And you can see there's quite a difference here. Just in seeing a couple charts, you get a feel for how the trading intensity is across the board. Collective of all traders, right? Big houses, ma-pa traders. The oil holders here, new structure high, pullback, intense trend resumption here with a dominant commitment breaking below. That's pretty bearish, but then quickly bouncing. And this follow through here, get out of town. Look at how steep this rally is. We've gone up very steep now, and a very large percentage increase, especially compared to something like the XLF. So if you look to the left, here's the most dominant spike at these upper highs here. We're just above it today. We broke below it yesterday. So we're starting to have a little battle there. With trades below and closes below this area, it opens things up. Just to give you the breakdown of what it looks like at these key price levels. Okay, so making a lower low than we did yesterday to trigger further downside, and then looking for about $1.50 for that first spike, and then down to about 52 for the next one, and then below 52 we've got this zone of interest here, but this is the most dominant area. So in this region here, we would expect the target 3. I'll give it the first one here since we're in a bull trend, but at about $50 or so for that next one. And it really correlates well with that trading commitment. You can also see, for those of you that have the balance beam, this is something that you want to look at. When you have breakouts to new highs, that's great. You got to be long, and it sure is a lot of fun to be long when things are going up like that. But look to the left always, and when you see the balance beams taper off like this, that means that the trading commitment is diminishing as we're going up. It's not a deal breaker in terms of the momentum run, but it just gives you a more focused area to look at when things break down. And it always happens where people are long based on emotion or fundamentals, and that doesn't do anything for them in terms of risk control, where you would take profits, anything about repeatability, doing the same thing again and again, whether it's OIH, GLD, XLF, etc. So watch OIH to break down a bit more, watch the XLF to break down below 22s, and then watch GLD to pop up about another buck, and then you could really see it accelerate to the upside there. Those are 3 ETFs. I just wanted to give you a snapshot of those as the markets are at some new all-time highs here and experiencing a bit of a sell-off yesterday. We'll keep an eye on that. That's your update for now, and we'll see you back in the live room.